Hello, Market Club members everywhere. Adam Hewison here, co-founder of Market Club, with your daily update for the major markets. After the closing bell tonight, we have the number one tech company, Apple, reporting, as well as the number one consumer company, Amazon, reporting their earnings. Doubtless the earnings of these two giants will have an effect on tomorrow's market. In today's video, we'll be looking at both Apple and Amazon and share with you how we are positioned before the earnings are reported. I think you'll find that our positions may be contrary to the popular opinion. Anyway, but the big thing is uncertainty persists in the market right now. Many markets are at the crossroads of making a major trend changes. The question is, are we going to see a continued trend on the upside for the equity markets or just the reverse? Is there going to be another dramatic fall? Have oil and gold finished going down? Are we going to be seeing both of these markets resume their trend on the upside later? And lastly, are we going to see a resurgence of inflation? These are all legitimate questions, and as always, we will rely on our trade triangle technology to lead the way. Now let's take a look at what's going on in the markets right now. So here we are at my homepage, Adam Hewison. I have the same system as you guys have as members, but you may want to look, if you haven't looked at our global strategy portfolio, perfect ETF portfolio, and World Cup portfolio. The World Cup portfolio is the one with the commodity futures in and has done extremely well. So we just take a quick look at that and you'll see 2008 it was 500%, 2009 48.5%, 2010 35.3%, 2011 186.7%, and 2012 is also turning out for a very, very positive year. We're going to have our Q3 results in probably next week. So watch this. Plus, we give you the signals every single day on these markets. There's the corn, wheat, soybeans, crude oil. You see we're short crude oil from 91.12. Spot gold, we're short there from 17.38. Spot dollar, we're short there from 79.09. So these are all positions that we have right now. So again, these are all positive positions for this portfolio. So let's go to our portfolio manager and start looking at the markets we look at every single day. We'll also be covering Apple and Amazon, so stay tuned for those markets as you'll find them very interesting. Now, earlier on, the markets were higher. Now, this market is the S&P 500, and what concerns me a little bit about this market is two things. I'm going to go onto a close-only chart. I'm going to put a trend line in here, which is easy to do. Just click on the trend line tool, which is right here. Then you see a little yellow box here, and grab this and draw this up. Now, the key thing is here, what I'm seeing is you have the three key points to it. Any trend line is having basically 3 points touch, and it's exactly what so we touch the trend line, rallied up. Touch the trend line, rallied up. This is the start, so you didn't rally there. But once you came down through the trend line, which is right here, the market was on the defensive. Now, you may remember we're short this market. We're actually out of this market right now from 1430. Market's currently trading at 1407. And if you look to where we closed last week, at 1,433. So we're lower for the week in this index. Now, we are oversold, which is right here. Our major trend is still positive based on a long term, but it's getting closer and closer to turning around to the downside. So I would not be surprised to see this market go a little bit further to the downside. So let's take a quick look at where the Fibonacci would take us back on a retracement level. So we go from the highs here. And remember, you've got to have the little box here. So you go from the highs to the lows. And you can see potentially we could go all the way down to 1350. Which is about another 50, 60 points from where we are right now. That would be a 61.8% retracement from the lows here. So that's pretty significant from where we are. So let's pay close attention to that. But the intermediate term trend is negative, meaning you should be, if you're trading using our monthly and weekly, which we recommend for this index, you should be out of the market right now on the sidelines. So let's go to our next market. That's going to be the Dow. And the Dow is also lower. Similar pattern. You can see the trend line. We can draw the trend line here. We've gone down. We are lower for the week. And it's not acting so well. 13,000 is got a big handle number, big psychological number for this market, just as 1400 is a big psychological number for the S&P. So moving on to a NASDAQ. Now, this is going to be a big one to watch tomorrow because of what's going on with Apple tonight. But again, this market is not looking so swift. We're on the sidelines here from 3,080. Market's 2,980, so about another 100 points higher we got out. And again, the market's very, very oversold. And also the MACD is getting into that really oversold condition. So we may see a pop tomorrow on the upside, or we may see downward pressure depending on what happens to the earnings tonight with Apple, which we'll be covering in just a little bit, so just bear with us for a while. So moving on to crude oil. Crude oil is very heavily oversold. Again, the long-term monthly is positive. However, the intermediate term trend and the daily trend are both negative. These are not good signs for this market, and it would appear as though those are both on the downside. But the way we score things using all of our tools, this is a minus 60, meaning it's a trading range. Even though it looks as if the trend is down, it's still in a big trading range according to our numbers. So going into a very simple chart like this, we can see that crude oil closed last week at 90.60 and we're 85.92, so it's a big drop for the week. And I don't think we're going to suddenly go shooting up unless something dramatic happens in the Middle East or here at home in the US. So I think the trend is on the defensive based on our intermediate term weekly trade triangle. So let's go on to our next market. This is USO. This is an ETF, pretty much the same pattern there. We talked about the oil. Now this is the Eurodollar. The Eurodollar, we've been talking about the Eurodollar, is really being a little bit suspect. And let's just do a close-only chart. And let's just take all of our tools off here and just go to a trend line tool. Again, click here, and you see the box here. It means it's live. Let's take from here and go in here. So if we close down here tonight, we're going to break through this trend line, which has been in place since July, I might add, July 25th. So this is not a good sign for the euro. And if you remember, we were talking about this possibly being a twin mountain and a sort of pivot point. Certainly the 128 level, we've talked about this before. You've gone two things here, depending how we close. Obviously, this is a potential breakthrough today. The right here, the 128 level is definitely a big number for this market, as is the 131 level now on the upside. I think that's the key, the two key areas you want to focus on. So one, defensive. I know with our trade triangles, if I just clean this up and go to our trade triangles, you'll see what I mean. So we still have both of our intermediate and longer term, the monthly and the weekly, still positive. Only the daily is a little bit negative, saying that the trend is a little bit on the defensive. So I would pay close attention to this market. This is a very important trend line. You've got all the points, in fact, more than 1 point. You can add them right here. There's 1, 2, 3, 4, 5, and finally through. That's a very significant thing that you should come through this. Now we may pull back, if we just clear this off the screen, we may pull back based on our Fibonacci numbers to an area that could be an opportunity. But going from the highs right here, again, you need to have the tool right here, Fibonacci retracement. Clicking from there to the lows, you can see we can come back all the way down to the 125, 124.75, which is a 61.8% Fibonacci retracement. I would not be surprised to see this market hit this level. As I said, last week we closed at 130.23, 130.23, and I think that we're lower, obviously, on the day so far. So tomorrow's going to be a very interesting day to watch in this market. Gold basically found support at the 1,700 level, as we thought it might. You've also got a couple of things going on with gold, which is kind of interesting. And let me just take this off the screen for now. But this is what I'm seeing in gold. Is one, you have a little bit of a divergence. Now, a divergence is when you make new lows like this, like we're making here, but the momentum starts going the other way. So The 1700 level, which we outlined yesterday as a support area, definitely held. We have a little pop today, but it's going to take more than that. We are for the week. We are lower for the week. We closed last week at 1,718. We're about $8 lower for the week, which we could quickly make up from where we are right now. And the other thing to look at in my book is to be looking at the MACD or the MACD. Still wide apart here on the two lines, the red and the blue. Needs to make a turn, and we need to see some indication on our weekly and our daily before we can get super bullish on this market. Longer term, we've talked about this before. If you go just to the max, you can see this trend has been pretty steady, and this is a breakout. We think this is a breakout to the upside, and once inflation comes back, which it will, then I think we'll see this market go higher. So let's see how things play out there and go to our next market. And this is copper. And we just want to go back into the 6-month copper. The 3.55 level, which is the support, we've sort of hit there a couple of times. Haven't really broken up to the upside. Still on the negative bent on both the MACD and the Williams percent R. So I would look for this market should begin to consolidate right around these levels. It should begin to find some sort of a base here and potentially have a rally. But again, it depends on the economy. If we see a little upspurt in the S&P 500, then you will see a little positive pop here, or things get a little bit better in China. But if it doesn't, then I'm afraid we'll probably come back to these levels that we saw back here and here. And this is back to about the 330 level. So let's see how things work out there. But generally speaking, the intermediate and the short term, both negative. Only the monthly is positive on this market now. With commodities, we tend to use the weekly and the daily because that's the way things work out better for these markets. So let's just clear the screen and go to our next market. And we're coming up, Apple and Amazon. So stay tuned for that. And let's go and see what's next. So silver's next. Pretty much the same pattern as silver. Monthly up, weekly and daily negative. So a little bit on the defensive here. You can see the weekly kicked in at 33.38. Obviously a lot higher than we are right now, but we're beginning to sort of base out. It hasn't made the turn yet, but we'll have to give it just a little bit more room to see how that plays out. But flattening out a little bit here with MACD and a little bit with the momentum. So let's see how that plays out for the rest of the week and certainly next week. But let's start with Apple. Apple Computer is not particularly working well today. The lowest close we've seen in Apple recently was 610, and we're currently 610 again. So we're getting close to making a new low close. And here's what we were talking about this on last night's show about Apple. What we're seeing at Apple is, I have an iPhone. I've had the iPhone since the beginning. I didn't upgrade to the iPhone 5 because, quite frankly, the iPhone 4S, which is the one I have the latest operating system, the iOS 6, which I'm very happy with, and I didn't see any need for a bigger screen. I didn't see any need for faster speed, and I live in an area that the LTE would not have done me any good anyway, so it was not an upgrade for me. And I think there are a lot of other people like me on this, and I think sometimes we are looking at Apple for just monumental changes in things, but unfortunately, I think with those changes, at least for the current band of technology, is over. We're just seeing incremental changes, faster, but the operating system is pretty much still the same. It's a wonderful operating system. I highly recommend it, but this looks to be a little bit negative. And the intermediate term trend, which is the weekly, is basically saying here on the 2nd of October at 656 to be out of the market. That's right, to be out of the market and on the sidelines. Longer term, from 355, we're still positive longer term on Apple. But right now, the smart money is saying you should be on the sidelines. That is a position in and of itself. Now, Apple reports its earnings tonight. You want to pay close attention to that because that could be a big mover tomorrow. Whether it's in the downside or the upside, doesn't matter because we're on the sidelines. I'll be happy to buy Apple if it makes the turn. I'll be happy to be on the sidelines, and if we have to short the market, we get a signal to short the market, we'll be shorting the market. So again, I think there's a lot of competition in this space now, and everyone's gunning for Apple. So let's go to our next market. This is Amazon, the largest consumer market we consider. This is a new low today. Basically, we are out of this market as of 10/10, the 10th of October, at 248.23, which is right here, 248.23, and we're currently at 227. So it's quite a bit higher, about $21 higher, about 10% higher. We got out of the market, and it isn't negative right now. It's not positive. The longer-term positive trend is still there from 199, but in terms of where we are in the intermediate-term trend, you should be on the sidelines. And quite frankly, before a major report or earnings, it's not a bad thing to be, because that could go either way. Even if there are good earnings, it could still disappoint. So again, you have to be cognizant of the perception. In many ways, is everything in the market. So, hey, I'm Adam Hewison for Market Club. Thanks for stopping by today. I hope you're having a good trading day. And be sure to visit our blog. If you're not yet a member, check it out. I think you'll really enjoy our programs, and you'll have unique access to our trade triangle technology. So have a great trading day. I'll be back tomorrow, same time.